the saying is "Don't fight the Fed." Is the Fed is accommodative whenever there's a problem. They're never super accommodative when everything's great. And if you look at the action today, it was pretty obvious the market was kind of strong. And then when Jerome Powell spoke, the market took off because he basically said, "We've got your back. We're extending, as your announcer said, we're extending the programs to the end of the year. We're concerned." And boy, that is green light for risk assets. I'm far more worried about next year for risk assets than this year.
Well, there was another message in there, Andrew, where Jay Powell basically hinted that it's time for fiscal policy to pick up their end of the bargain. I mean, he doesn't want to stray into territory where he tells them what to do, but clearly it would be helpful if we got some consensus out of Washington on the next round of stimulus. If we don't get a deal there soon, are we going to see a knee-jerk reaction in the markets?
Well, look, Congress adjourns on August 10th for the summer. And when that happens, all those congressmen are going to have to go back to their states. And do you think they're going to want to go back to their states and say, "I voted against a stimulus program. I voted against you getting more benefits"? I don't think that's happening. So, there's going to be a lot of backwards and forwards. There's going to be nothing's going to be solved this week. There's going to be nothing solved, next week. It's going to happen right before August 10th, and then there will be an agreement. So, yes, there needs to be a fiscal policy program. If there wasn't, it would be very bad. I think markets would go down, 10%. But I put a very low likelihood of that because I don't think any elected official wants to show up back in their state voting down a proposal.
Sure.
Right, Andrew, good morning. Tanveer joining in this conversation. You're making the case in your notes about the markets being disappointed in 2021, given the cutback that central banks would plan on liquidity. And I wonder what would kind of build the case for that to happen, because so far it seems like central banks are very wary of spooking the markets by talk of any kind of tapering.
Sure. And that could push market strong well into 2021. But, as it pertains to Fed, think about it. The dual mandate of the Fed is to control prices and stabilize prices. And I think there is inflation bubbling up. It's just not showing up in interest rates. We see gold prices moving higher. The dollar has been very weak. And so, and you're seeing other commodity prices moving up. Materials is the best performing sector this month in the markets. So I think you're starting to see signs of inflation, but it's not showing up in interest rates because central bankers are buying bonds. And so I think that ultimately next year we could have an issue on our hands. It's just not this year. And so the green light is this year. Next year is going to be the issue. But what's so tragic is right now, there's uncertainty outside because of the coronavirus. If we get a vaccine, things look better next year. People feel better about it. But it will be at that time that the central banks begin the process of reducing liquidity. And certainly we won't have the same level of fiscal policy response either.